Welcome to the Fear and Greed Daily Interview. I'm Sean Aylmer. I've spoken before about the number of Australians now looking overseas for investments, and it won't surprise anyone to hear that US markets are proving to be extremely popular. It might be our familiarity with so many of the companies listed there, Facebook, Google, Amazon, the car companies and the like, and maybe it's because it's getting a lot easier to invest. Stake is an Australian app providing investors with direct access to US markets. They're also a great supporter of Fear and Greed. Matthew Leibowitz is the founder and CEO of Stake and my guest this morning. Matt, welcome to Fear and Greed.
Cheers. Thanks, Sean. Thanks for having me.
Without thinking about it, what's the most exciting thing on the US market right now?
Oh, I think the Coinbase IPO has sort of been the most exciting thing recently. Obviously, you had GameStop before that, but in recent times, I think it's the Coinbase. Just that exposure to crypto and being listed now makes it pretty accessible for most investors.
Now, you're going to have to dumb it down for me on this one. Coinbase is one of those listings which I thought I understood, and then when I saw what the share price did, I thought, maybe I'm missing it. In essence, what's the product that Coinbase is offering?
It's essentially a cryptocurrency exchange. It gives people access in a similar way to Stake, but it's actually sort of created its own marketplace for cryptocurrencies to be traded and swapped and bought and sold. So it's like the main one in the game.
Where were they before? Is it just that it's much more accessible because it is listed? Is that kind of the big thing about Coinbase?
Yeah, they were always the biggest player. They were, very well known if you'd invested in cryptocurrencies and you'd traded them probably, in the last sort of 5 years or so, you'd know about them. And now they've just been a privately held company, well backed by, PE firms and VC firms, and came out with an $86 billion valuation US dollars. So, pretty significant business.
Yeah, it's fantastic. Our producer, Michael, loves cryptocurrency, and I still find it really difficult to understand the intrinsic value of cryptocurrency. And so off air, our continual arguments are about how much we should be doing on cryptocurrencies. Are you a fan of cryptocurrencies?
In essence, yeah, I think it's great that securities can be traded. I don't really have a strong opinion of where they're going to go. I think it's one of those things that you sort of need to embrace because it is here to stay. So, as a founder of a fintech company, we just need to be aware of what's happening. So I think, it's something that I've invested some time in getting to understand.
So why do you think there's so much interest in US markets at the moment?
I think your introduction sort of summed it up, just the knowledge of the brands and the companies you can get. And if you actually look at how deep the US market is, it's so dynamic. There's 15,000 stocks in the US if you include some of the OTC names. The largest companies in the world and some of the most dynamic, themes are coming out of there. Like all the vaccine companies for coronavirus are listed on the US and they're raising capital in the US to go and try to solve this problem. So look, it's 40% of the world's market cap. It trades every day. Even socially, I think when you look at how things are presented in the media, even in Hollywood, it's all about the US market, whether it be The Big Short, Wolf of Wall Street, even Black Friday on Netflix. These are names and markets that everyone understands. Everyone knows what Wall Street does overnight, and people just haven't been able to be a part of it. And that sort of changed in the last few years with accessibility with apps like Stake.
With an app like Stake, one of the things about Stake, which I do like, is the idea of fractional shares, because often companies in the US trade at huge numbers. But what your app does, it allows people to get into the market without necessarily having to put all their money in one stock, for example, because they can only afford a handful of that stock's shares. Is that right?
Yeah, it's really common in the US. All major brokerages have, fractional shares allow you to invest any dollar amount in a stock. So you can buy $1,000 of Berkshire A, which is trading at, multiple hundreds of thousands of dollars. It's, it's very stock standard for the US. Their structure is obviously different to Australia, where we've got a HIN model. So it's, it's nothing really new for the US, but all we've really done is packaged up a US brokerage and brought it to Australians so they can access it just like you lived in the US.
Okay. So what should locals, Australians, keep in mind when they're investing overseas?
Well, they should just know how the system works. I think structurally every market is different. You've obviously got currency fluctuations as well, whether you're trading in Aussie dollars or US dollars, or if you're trading into the UK, you've obviously got pound. In Europe, you've got the euro. So just being aware of that. Also how things settle. There's different, everyone's so... it's been so inaccessible for Australians before to access global markets that we sort of assume that everything's structured the same way the Australian market is, but Australia sort of stands on its own. And just sort of knowing those differences is really important when you sort of put your foot in the water.
Currency, obviously, but a lot of the process stuff is what you're talking about.
Yeah, so for the US, you need to fill out a W8, which we actually do automatically for customers, so they don't actually need to do it. We're sort of the first to do it digitally in Australia. You're filling out that form can, with one of the older bank brokers can take, weeks before it gets processed, so you can't even get started. Look, it's just different, and it's not materially different. Ultimately, you still got to manage your risk. That's the most important thing. But when you do get started, it's just knowing how things work. Certain rules that apply in different markets are, they make it a little bit more complicated, but it's really not that different. And it all comes down to managing your risk when you're buying and selling shares or investing in any asset. You've got to know what your downside is, and that's the most important thing always to focus on.
Stay with me, Matthew. We'll be back in a moment. My guest this morning is Matthew Leibowitz, Chief Executive of Stake. The Stake app, is it only in shares, or you can invest in ETFs and all sorts of things?
Yeah, so we're an app and a web platform. All it really is a full suite brokerage that gives you access to the US market, and it's got over 4,000 stocks and ETFs. So there's over 800 ETFs, I think, on Stake. So very significant. You can invest in gold, natural gas. You can go and be short the NASDAQ if you want. That hasn't really paid off in the last 12 months, but you can go get short the Russell, or you can invest in DOG, which is short the Dow Jones, my favorite name in terms of a name of a stock.
DOG.
So there's all sorts of exposure here. DOG, it's a great stock ticker.
Yeah, and the Dow Jones has done pretty well, so it actually hasn't been a dog in recent times.
Yeah, it hasn't. No, but the dog's a short one, so it actually has been a bit of a dog. It's the inverse Dow Jones. But yeah, the US market is so deep. It's got so much exposure to different asset classes. You can invest in pretty much any asset class via the ETF market. So it's all there. It's basically like an Aussie brokerage, but just for US stocks. So it's simple as it gets.
So I always talk about the S&P 500 and the Dow Jones and the NASDAQ, but there's also the Chicago Stock Exchange. How many exchanges are there in the US, and can we invest in those sorts of things? Or as a mug investor in Australia, are we better to stick to those main exchanges?
Yeah, the exchanges don't really matter. It's where the actual company is listed. So what happens in the US is there are 13 actual stock markets nationally, and every stock pretty much trades on all of them. So it's like a little bit like with Australia, you have the ASX and Chi-X. Obviously, Chi-X is a smaller player compared to the ASX, but in the US, there are 13 exchanges all the way on the Pacific. You've got the Pico, and then you've even got in Boston, you've got BOX. And every stock trades on each, and you can get lots of liquidity from all of them. So it's not really the exchange that's your problem. It's more the stock and where its main listing is. So, for example, Amex is on the NYSE, but it'll trade on all 13 exchanges. So the exchange itself is not really the complication. What that does is it actually adds a structural advantage to the US, where you've actually got lots of exchanges competing for liquidity, and that sort of push prices down in terms of execution prices.
Okay, so just talking about pricing, Stake doesn't charge a commission on trades. What's your business model? How do you guys make money?
Yeah, so most US brokerages don't charge brokerage. The main 5 or 6 players there, probably even more now, don't charge brokerage fees, and that's very common in the US. So we make money. As I said, we've just wrapped up a US brokerage account and brought it to Australian. So we make money in 3 ways, actually, when you move Aussie dollars into US dollars and back again. So not on every trade. So if I want to go and transfer 10 grand into US dollars, I'll end up with US dollars to go invest in, Berkshire Hathaway, Facebook, Tesla, whatever I want. And when I want to bring it back and withdraw my money, so that could be a year later. And then it's free trading in between. So there's one, an FX. Then we've got Stake Black, which is our premium pack, which gives you access to analyst ratings, buy, sell, hold targets or ratings from analysts, and then also price targets as well, and then also being able to trade on unsettled funds. So when you sell stock, it normally takes 2 days to settle in the US, but we give you access to that in advance. So that's Stake Black, which is $9 a month US. And then we make money, well, not at the moment, on the idle cash sitting on accounts. We earn any interest on that. But obviously, with rates at zero, it's really only 2 ways we make money right now.
You're opening your app to investors in New Zealand and Brazil and the UK, is that right?
Yeah, so New Zealand's been one where we had a lot of New Zealand customers trying to jump onto the Australian site. So we had a lot of demand there. So it made sense to go and solve that problem. And really, the US market is actually very inaccessible for anyone outside the US. Doesn't matter where you are. I studied in Australia, but then went and worked overseas in the US and just realized how hard it was for people outside the US. So that problem is a global problem we want to solve. And my co-founder is British, so that makes sense to be over there as well and go attack that market and try to solve the problem for British investors. And my chairman actually built and sold Brazil's first online trading platform. So Latin America is also a key market for us. So it's really one product with multiple markets we can solve the problem for.
Okay, and most of the investors are facing the same challenge of actually getting into the US. Is there any difference between the investors in the UK, Brazil, New Zealand and Australia, for example?
Yeah, there's always I think Australian investors actually and New Zealand investors are a little bit more advanced. They sort of understand the problem, and it's a smaller local market here. If you think about the size of these markets, and we've sort of been banks and miners in Australia, and obviously in recent times like Afterpay, Zip, WiseTech, those sort of names have been a bit more exciting. But I think we've been crying out for access to, I guess I wouldn't say more exotic, but just more choice. Ultimately, we understand what Google, Facebook, Amazon, we use these products more than we use Australian products. We've got more affinity towards them. So there's 77% of our customers have invested before in Australia and New Zealand. So for them, it's a case of, I understand my local market, but now I want to go a little bit further and just go a little bit deeper into new opportunities.
We'll be back with more in a moment. I'm talking to Matthew Leibowitz, Chief Executive of Stake. So what's your take on Wall Street at the moment? I mean, we're in the middle of earnings season and we've got this week's a big week for tech stocks particularly. The market seems to be, it's certainly trading near highs, so there seems a fair bit of confidence over there about the rollout of the vaccines.
Yeah, it's a really interesting one. I keep scratching my head. Like I always think it's really frothy because every day I look at it, it just keeps going up. But I actually think the issue, and look, this may be too technical, is actually the denominator. I just think the value of $1 is just so much less now. It's not like these companies are worth 3 or 4 times more than they were a year ago. They are, but in a dollar's term, like $1 is not worth as much as it is because it is printing so much money around the world. So, look, I don't know. I'm always nervous.
So it's almost an inflation issue here.
Yeah, everyone looks at a stock and goes, the stock's up. But it's like, what does your dollar buy anymore? I think currencies are just not that valuable. So, as in a very simple maths, I say it's the denominator, not the numerator.
It's an interesting concept that it's almost like a paradigm shift because of the easy monetary policy around the world. It's almost like re-rating everything as a result of the flood of money around the place.
Yeah, assets are just more valuable compared to cash. So
same with housing, perhaps, and those sorts of things.
Yeah, it's just bizarre. It's a really bizarre time. I've been in the market since I worked at a high-frequency trading firm, and this is one of the more radical times. I think most people would say that. I saw the flash crash in 2010, the GFC in 8 and 9, and this is just radical in its own way.
If you're right, that doesn't mean then that the markets are going to come back necessarily. Like they're not necessarily overshooting when there's that much more cash. It may mean that we're going to end up with a lot of inflation down the track, but at least in the short to medium term.
Yeah, there'll always be pain. Markets go up and they definitely go down too. Just people just need to be aware and have a strategy in place for when things do turn, because they will. It's just a matter of when, I think.
So is that the best piece of advice for first-time investors? Understand that they go up and they go down?
Yeah, and they can go sideways too for a long time. Markets are like a roller coaster. You just got to be ready for the ride. I think, if I had 2 pieces of advice, it would always be start small, but you manage your risk. Everyone gets too caught up in what to buy. I think the real money's made on when you sell. So, focus on the sell. Anyone can tell you what to buy, and you can literally throw something at a dartboard. But if you don't sell at the right time, that's when you really get hurt.
Fair enough, Matthew. Thanks for talking to Fear and Greed.
Cheers. Thanks for having me.
That was Matthew Leibowitz, Chief Executive of Stake, an Australian app providing investors with direct access to the US market and beyond, for the Fear and Greed Daily Interview. Join me every weekday morning for the full Fear and Greed podcast with all your business news. I'm Sean Aylmer. Enjoy your day.